Ladies and gentlemen, please welcome the founder and CEO of OYO Hotels and Homes, Ritesh Agarwal.
Right. Thank you. All right. Thank you so much, everybody, for having me here. It's an absolute honor to come back to Phocuswright. Sometimes I joke and I say that I've probably grown up publicly here in front of the travel industry at Phocuswright. So thank you so much for having me here. I was here last year at Phocuswright 2018, and we were a South Asian company, and Maggie, of course, talked quite a bit about our expansion in China and how we were growing in there. It's still early days. We talked about all the good things and what we could improve, and we'll keep the same spirit as we go ahead. But I'm very happy to share the first big update in front of all of you folks from the same fraternity, which is in 1 year, we now operate, as per the recent STR report, the leading hotel chain in Asia Pacific. So I feel that it's probably good omen talking about specific businesses of OYO in Phocuswright, because it possibly turns out to do well over time. But I felt I wanted to use the opportunity today to do 3 things. 1, give you a broader perspective about what's happening in OYO. Second, talk a little bit about some of the global trends that we are seeing here at OYO. And probably the third one is specific to regions. Last year, we spoke about China. I think this year, I'd like to take some opportunity and spend some time on the United States, which is our newest market. It's still very early, very similar to what China was last year. But we'll see, I guess. We've seen that worldwide, there are hundreds of millions of unbranded and small hotels and vacation homes, all of which deserve to be renovated, operated well, and require significant amount of efficiency within themselves. We've gone out there and said that there are 3 primary problems. They have poor customer ratings, high cost structure, and the interior designs are not great. And we've said, how do we create quality living spaces? In that process, we've evolved worldwide and now operate over 1.3 million rooms across the world. Now, that's reasonable, but still a smaller part of what the global hospitality industry is evolving into. So last year, same time, like I said, we were in India and China. In the Q1 of this year, we expanded into SEA more broadly. In the second quarter, we launched in Europe, and I have our European team here who've been doing a fantastic job out there. And of course, in the Q3, we launched in the United States. There's a lot more to do, but at this point of time, we are very focused on the amount of geographies we have. In this process, we've had the opportunity to be one of the leading hotel operators across the world, from US into, of course, our vacation homes in Italy and all across Europe, our hotels in London, India, of course, Indonesia, Japan, and more. This room expansion has led to rapid expansion in revenue as well, where the company's revenue between last year to this year has grown by over 4 times. With US and Europe now contributing to close to 20% of our global revenues as we speak, becoming a very important part of the overall scale. But when a lot of these have happened, one of the things that we've all heard as a global trend in technology industry and growth companies as a whole is that high growth without profit is not something that the markets are very excited about. We've heard it, and this is something that we have constantly driven towards in the last many years. And one of the things that I wanted to talk about here is that we issue an annual report publicly every year. So you can just search this as OYO Annual Report, which is our audited statements. In mature markets like India, we have constantly been improving our net loss percentages on a year-on-year basis. Our FY19 numbers are due in a couple of months, so stay tuned to search the OYO Annual Report if you're interested, and we continue to believe that we will make a positive improvement in this direction as we grow. But we do believe that growing right is much better than growing fast, and that's the principle that we've operated since FY17, as visible in the results here. But as we've grown this quickly, not all has been as exciting as you saw earlier. There have been areas that we could have improved or we could have done better. One example of that is, as we've grown worldwide, could we have expanded the OYO competency and OYO technology at the speed in which OYO has grown worldwide? Absolutely. I'm very thankful that even beyond this, we've been able to grow so well and deliver the RevPAR jumps that OYO needed to deliver because of the great OYOpreneurs across the world and team members, and we are hard at work to continue to improve this. But I'm very thankful to our OYOpreneurs and team members at OYO who, beyond a lot of these problems, have continued to drive OYO's acceleration while delivering the right results across the world. We talked about talent as being one of the key examples or reasons of impact. The second that I see as a big positivity that OYO has brought in the last few years is use of technology and data in the hospitality industry. Last evening, I had the great opportunity to have a small session with Lee Pillsbury, who's a very popular real estate investor, also the current owner of The Diplomat. I think one of the very interesting learnings that he shared was, in the next generation, great hospitality companies will eventually just be great data scientists. Now, of course, I believe there'll be great data scientists with the good old world hospitality. Now, in that, there are 4 important learnings we've had over the last year that have been very interesting. The first one is, how do you use AI and data to be able to predict the assets that you choose? OYO goes in and provides the capital in a number of hotels that it goes and partners. So being able to make sure that we're deciding the right hotel is extremely important. So OYO's Orbis app can, on real-time, predict the potential revenue, upside, cost in various parts of the world to make sure that our deal underwriting is probably much more easier. And we use large number of data points to be able to make sure that we can sign the contract quicker than most other legacy hotel chains. Along with that, our vacation homes business have found some incredible competencies. One example of that is investing in a swimming pool or a sauna. We have seen that investing in some locations across Europe for a swimming pool or a sauna or things like those create a revenue jump of up to 1.5x. These are very small investments, but the upside these create are very significant. Or something as small as, in the US, having beautiful portraits in the room make hotels feel a lot more boutique, and hence consumers are willing to pay a little bit more premium because of these experiences that consumers are able to appreciate. This is an example of using data to predict what kind of interior design with the lowest cost can give the highest jump in results. For a long time, hotel industry has had interior designers who have no responsibility or accountability of IRR, who go in and decide what the effective design will be. And at OYO, we work with our interior designers to make sure that together we have a yield responsibility at the end of the partnership. And of course, we bring dynamic pricing into the ecosystem. A lot has been talked about it. Or for instance, we make our operations way more efficient by means of using our housekeeping app. This has translated to over 90 million users and close to 50 million customers with OYO hotels across the globe, from Asia, Europe, United States, and of course, growing quicker across the world now. This is also on the hotel booking apps. OYO is among the top apps on Android and increasingly on iOS. But this has also led to improved customer experience. And we've had significant improvement there, but there's a lot more for OYO to do. But for example, in India, over 90% of our revenue comes from repeat or word of mouth, not from advertisement or similar channels. I wanted to use the opportunity today to talk a little bit about, like we spoke about China last year, a little bit about US and what's happening here. So to begin with, one of the questions that we were always asked is that, does US have a real lodging opportunity for a new hotel chain to come in and bring partnerships? And our view was, absolutely it does. The hotels that we saw, we felt that they required the capital for improvement, better customer service, and better rating. For example, this is the first OYO hotel in Dallas. It is called the OYO Galleria Dallas. This is how it looked like earlier from the outside. And this is the transformation from the left on towards the right. Depends on how you think about it, but if I were you, if I had $50, I would stay in the room on the right versus the room on the left. And that's essentially what we're trying to transform here in the lodging industry here in the US. And what it translated to is the occupancy of roughly 20% going up to 75% in a few weeks, because consumers said at $50, they would rather stay in the, sorry, does it go back? Yeah. They'd rather go to this place rather than the one on the left. And we've been very happy to see the positive results, both not just in the form of occupancy, but also in the form of RevPAR as well. So we opened our first building in the US early part of this year, and we've evolved significantly over time. And today we operate over 200 hotels across the United States in less than 8 months. And every day we go to sleep, we open at least a hotel and a half. Well, 3 in 2 days. That's probably a better way of putting it. But we are very thankful to our customers and our asset owners in the US to give us the opportunity to serve them here in the United States. In Europe, we acquired a company called At Leisure, and now we've together as a family become OYO Vacation Homes, and we manage significant number of rooms as a combination of Bellvilla, Dance Center, and Traum, who've been doing an incredible job as a part of our family. I would have had a lot more to talk about, but I wanted to take the opportunity to talk a little bit about our home markets in Asia. China is one market where a lot of people have been saying that there's slowdown. We don't see any slowdown. We see consumers wanting to come and experience the economy and mid-market hotels more than upmarket, because in the times of slowdown, people are wanting to use more and more places for slightly lower prices, but of reasonable quality. So we now operate a few 100,000 rooms in China itself. And we've seen the occupancy jump across markets being significant. India and Southeast Asia. A lot of people say that India and Southeast Asia are small markets, so why should we go back and invest? We started in India, and we are very proud to have started back in that part of the world. And we've seen that even though a lot of news reports say that India is a small market, Southeast Asia is growing, but still young, we see that India continues to grow and be a very important part of the OYO ecosystem. And Southeast Asia is a leader in terms of how service quality of OYO could be maintained. And as many of you haven't traveled to that part of the world, the kind of service experiences that people bring in Indonesia, Thailand, and other parts of Southeast Asia is pretty incredible. We have over 97% hotels there rated at this, and at an average of over 7, 7.5. And even Southeast Asia has continued to grow. So we want to make sure that we take all our competencies, we use technology, we use the good old world hospitality of doing your room right every day, as over 500,000 heads are on OYO pillows tonight, and we deliver better living spaces to people of the middle income nature, which we believe that a lot of hospitality brands haven't solved for a long period of time. So with this, I want to thank you. I had limited time, but with this, I hope I've been able to do justice to give you a whirlwind tour to the world of OYO, all the goods and a lot of improvements that we need to do. But like I said, we've publicly grown up in front of Phocuswright, so you will continue to see us for good or for potential improvements in the years to come. Thank you so much.
Thank you, Ritesh. If you can just take a seat behind you while I introduce you to your talkbackers. First up, Hichame Assi, MD, APAC and Hotels for KAYAK and HotelsCombined. And Maggie Rauch, Senior Director, Research and Head Analyst, Phocuswright.
So Ritesh, some impressive growth in those slides, big numbers, expansion into difficult markets like China and the US. I'm curious how similar or different that deck that you just shared with our audience is from what you first would have presented years ago before you got the first big investment. How has it changed?
You know, quite a bit, because when we started, our aspirations were very limited. I would have been, I remember the first time I gave an interview, and I was less nervous than I am now with you on the stage, but one of the questions was, this is your first OYO guest house. How many more do you aspire to build? And I said, in the next 30 years, probably 5 to 10 of these. And I felt very happy.
Next 30, 5 to 10?
That was 5 years back.
So how did that vision, is you changed, things grew so quickly, or did you get with some people who said, Ritesh, you're missing the opportunity and you can actually grow this a lot quicker?
Look, it wasn't like one thing happened and life changed. It was, I always say that the higher you climb, you get to see a broader horizon. So I think when we had the 5th hotel, we had probably 6 or 7 enquiries to come and join the OYO chain already. So I felt, well, this looks like it's not going to be 10, it's probably going to be 30. So I think that's changed as the company has grown. And I think I've also been surrounded by high-quality leaders and business managers. In the history of my company, I've never lost a senior leader in the company. So I've been very happy that they have also advised and helped me as the company has grown. But I feel personally that I would have been happy even with the 10 hotels. But I'm not disappointed about this either.
Very impressive growth on the supply side. So my lens is a bit different. I don't have much experience in blitzscaling. We were at HotelsCombined as CEO, I was always focused on profitability and sustainable growth. So I was wondering, with this kind of scaling, how do you keep the culture of the company intact, and how much time do you spend on teams and alignment and making sure you don't lose what makes OYO special?
I think this is a great question, and I think probably it's rightful that it comes from Hichame as an entrepreneur himself. I think one of the things that we've seen in the history of our company is that we make the best decisions when our backs are faced towards the wall. In the toughest times is when the best innovations and the best outcomes come. So our best of business models, best of business designs have come in the toughest times, which is why I think I have evolved my internal role from CEO to CCO, Chief Clarity Officer, because I believe that in situations like this, knowing what to do is probably very important, and what is more important is knowing what not to do. And I think as an organization, as the company's evolved, we've been able to make sure that we've made decisions at each point of time, which is designed to make sure we do a few things but do them right, rather than do a lot of things. Because when you see this slide, it feels like there's a lot going on. But if you see the opportunities that come our way, the number of things we say no to is probably a lot more than the ones that we say yes to on a daily basis. So look, I think the end on the culture and how I spend the time on aligning it, I think my job, I say, is 50% to 60% is Chief Clarity Officer. So how do we make sure that each of our leaders imbibe the same spirit, and they can take this cultural principles across each leader in the company through 3 principles. I believe most companies write the same things on the wall. But essentially, the decisions are based on 3 times. 1 is the people you recruit. 2nd is the people you promote. And 3rd is the people you penalize. These are the 3 times the rubber hits the road on your culture, and we try to do our best to make sure that we stand true to our culture in these 3 times when we make the decisions.
Ritesh, it looks like we have a question.
Hi, thanks a lot. Kevin Kopelman from Cowen. So just a question, Ritesh, with as fast as you're growing, how are you thinking about managing cash flow versus absolutely optimizing your growth potential in these new markets? And then a second question is, how do you maintain the quality of operations at the hotel level with the level of expansion that you have? Thanks.
Thank you, Kevin. Very, very important and pertinent questions, and some things that we think a lot about. I think the first one is, you must have seen the slide on the net loss that we presented. I think for us at OYO, one of the things that we do believe is that making sure that you're utilizing your resource in a manner which is well-designed and organized is extremely valuable. So first is your mature market should continue to grow in terms of potential reduction in net losses over a period of time. And we've been doing that in India, and you'll see that coming out in China, Southeast Asia over a period of time. So from our perspective, we want to make sure that if there is one market that we're growing, there is another market which is continuing to get on the profitability direction that ensures that as an organization we're doing the right things. And the second is the gross margin of our assets across the world need to be attractive enough for OYO to go in and partner them. If that's not the case, there's no reason for us to partner because we're not paid for the value we bring to the underlying asset. I think the second question, which is about the consumer experience, I think that's one of the areas which I talked a little bit about a potential improvement as well. But I do believe that there are 2 things that have been leading us to make sure that we are continuously improving our service quality. The first one is we are not sad or scared of being able to go invest the capex to make sure that we can continuously improve our underlying asset. The only question is, does that capex lead to a significant premium on RevPAR, which can pay back for that capex and hence make significant net profit for OYO in the years to come? And the second thing is by means of making sure that we have a 3C program. So OYO has a 3C program which ensures that assets that join on board, if they get ratings which are lesser than a certain range over a period of time, initially, they get red lines, and asset owners get red alerts saying that you've got to fix it. But at one point of time, if we feel that it's unfixable, we actually let the asset go. And we've had hundreds of assets in the OYO history that we've let go out of the OYO ecosystem because they did not follow the rating and the quality of consumer brand standards that we would like to deliver behind. So those are the 2 answers on the profitability as well as on the consumer service. Thank you.
You mentioned, Ritesh, how you're changing some of these properties and the reviews that result. I don't know if we have, your presentation was so quick. I don't know if we have the slide that shows the before and after, again, of what you're doing there. And particularly,
let's go to the room.
Particularly the rooms. Yeah, that's what I wanted to see too. So we'll see if, I'm not sure if the team has it ready, but they're pretty great. Just curious a little bit. For one thing, I noticed that you, on your, if you India-based properties, you have ratings and reviews. For US-based properties, reviews are so important, and you only have ratings, no reviews on your site. And if you go to TripAdvisor, you can find some really challenging reviews of your properties. And when I look at some of these images, this one looks like a big shift, and some of them look like essentially almost just art added to the walls. So how much can you really do when you're growing so quickly to improve the experience? And why not offer the ability for guests to share full reviews in the US?
Yes. So I think let me answer the easier question first. So first one is we have to have reviews. I think that's something that we're working on, and we will make sure that next time we're at Phocuswright, you have the reviews on our hotels that exist there. It's great feedback and something that we're working towards. But the second one, which is also very important, is that even if we have reviews, we should talk a little bit about why the TripAdvisor reviews are what they are. And I think within that, what's important to understand is a lot of those reviews are also of the past that we are receiving from the asset that existed earlier. Because a lot of these platforms, they do not remove the previous reviews that the assets already had, which is why if you look at the reviews changing after the OYO hotel brand signage has come in, that improves. And the second one is...
So at what point, like how soon, with all of the scale, how soon can we expect to see that really start to turn around?
All right, so I think this was supposed to be an announcement for the later, but maybe I use this opportunity. Starting Q1 of the coming year, you will see no OYO hotel flag on an asset below 3.5 on 5 rating on hotels. So
this is based on the ratings where? The ratings
TripAdvisor or one of the third party.
So you kick them off of OYO?
We'd rather improve in the next 5 months to get there. We'll try to improve. But the third question which you asked, which is about saying how much can you really do at the speed in which you're growing, I think from our perspective, if you look at how these assets look like earlier versus where they need to go to, there's not much you got to improve. If you were to think about the breakage of walls, if you need to think about the breakage of corridors, you don't need to do all of that. You need to get the carpets right. You know, that room, if you went to a lot of hotels that look like that, if you want to go to the washroom, you got to put your shoes on. All we got to try and do is make sure that you don't have to put your shoes on.
Sure, it's hard to show from just simple photographs. It looks like a question from Ram.
Good morning. You mentioned a lot about innovation, and your business model is very much based on innovation. And I was wondering, how do you balance opening so many properties so fast with all the time innovating, which require trial, finding new technology, adapting? Because every time you open a new property, normally you try to use technology that exists in order for the opening to be smoother.
Yeah, that's an important question. That's an example of what I mentioned earlier in the perspective of saying that how do we make sure that as our portfolio gets wider, our systems and technologies are adaptable to be able to manage the broader ecosystem of assets across the world. So this is one of the areas where we try to have significant amount of background feedback loop to make sure that we make our decisions in a much more easier fashion. So for example, if there is a specific asset which has a certain kind of a room type that OYO hasn't seen in various of our assets earlier, we have a feedback loop which makes sure that our technology teams review that how many assets do we have across the ecosystem coming up with this new kind of room type. And then if there is as many assets of those kind, we try to make sure that our engineers are hard at work to make sure our systems are prepared to handle accommodations like those in a month. So that's something that we are constantly looking at, but we are very excited that we've solved significant percentage of problems there, but we continue to encounter new kinds of challenges that our systems need to adapt to as soon as possible, including payments, for example.
Perhaps we can look at it from the other side. So if we look at the hotelier side of things, it seems like there was a bit of... sorry, I'm here.
No.
It seems like there's been some reports of frustrations in Japan, India, and more recently the US. It seems maybe some hotels had different expectations of the demand that was going to come in. So obviously you're scaling dramatically on the supply side. How will you continue to secure the demand, and what will you do to kind of reduce the frustrations that could be considered, I guess, teething problems in a disruptive world? Yeah, I'd be interested to hear your comments on that.
I think the first thing is most of those complaints are about lots of demand. And of course, along with demand, the kind of consumers that come by, the OYO OS and the systems that we use on the background, and so on and so forth. That's something that I tried to address earlier with that slide as well. I think from our perspective, we believe that as we've grown across the world, if you see a bunch of those reports, there's two sides of the story. There's some asset owners who are happy, but there's some asset owners who have lots of expectations that we need to fulfill and do a better job at. I think we believe that as OYO has grown across the world, we haven't taken our competencies and technologies in the same format in each part of the world and launched it immediately. But I think as we've grown, we've also made sure that we've improved on all of them. And I believe that in all of these markets, we will continue to improve these experiences to make our asset owners excited. What's also interesting is if you look at a lot of those reports, more often than not, all the asset owners who would share that they have challenges would continue to remain in the OYO ecosystem. So they continue to give us time, and we are very thankful to them because they believe in the value and the proposition that OYO is bringing, and we're working together with them that we can get them the best results. But no questions that we've had our challenges, and we're excited about continuing to improve those.
Thank you. So my last question, I think we're almost out of time, is you're rolling out a hospitality brand in many markets, but one of them, the US, has a lot of long-established brands at all different levels. And we haven't seen the marketing push yet for hoteliers and for travelers, but what can you share now about what does the OYO Bros brand stand for that would make it stand out in this already pretty crowded and consolidated lodging market?
Sure. I feel that there's opportunity for multiple brands to try and make a difference. So we respect all the other brands also which exist out here. You'll see some of the consumer proposition push over a period of time. But I think our principle is fairly straightforward. That is, whether you're driving across the highways, whether you're out there for holiday, or whether you're out there for business, getting a consistently well-rated experience at a price that has never been thought about. How do we bring that for the economy and mid-scale segment in the United States? That's something that we're trying to bring, and the consumers who come to us continue to keep coming back to us here in the United States, even though the number of customers is small today because we're just 200 hotels. So we feel that that's showing up in the form of loyalty programs back here. But still early days. You'll see more as the months go by.
Exciting.
Looking forward to it. Thank you, Hichame and Ritesh.
And Maggie Rauch.
Thank you.
We appreciate it.
Thank you, Maggie.